following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. And let's just take a look here at how these markets are performing so far. We were quite a bit lower last night, starting out, and we will be looking at your main chart today, which is the New York Stock Exchange chart. We've updated it to show you what it looks like. It's the weekly. Folks, I'll let that chart speak for itself. I mean, all you have to do is look at it, but it is it's a perfect chart. I mean, if you believe in pattern recognition and you believe in similarities and market repeating themselves, take a look at this puppy. I mean, we're in the New York Stock Exchange Index. We took out the low of August 24th, which was that main cycle low that we had. We then rallied for 10 weeks up to the 61% retracement. We touched the downtrend line on the way down. I mean, all of that stuff is telling us that, we're at a real critical level in these darn things. So you want to pay attention to what's going on here, at least from my opinion anyway. So, keep an eye out on this. This thing is really starting to look bad. Now, we do have a new moon, and we have some astro cycles that are coming in they started on the 10th and they go through to tomorrow, but the rally should only be a few days. I'm looking maybe into the 11th, 12th, 13th, maybe into Wednesday, and then we're going to probably start down more. I mean, this is a really nasty chart. In fact, if you look at all the charts in the world, I mean, it's hard to find. Just to give you an example here, just take a look here at all of the. Let's just get this up here so we can see it. You'll be able to see here that if we look at all the stocks, all the global stocks in the major countries, there's not one of them that's up. I mean, it's it's really they're really heading to the downside. Now, the leader of the pack is something that we were talking about last year. It was a total focus of attention, and that was the Greek stock market. And I'll put this one up to take a look at, and you'll see that we've given up 99%. This thing's damn near to zero now. This is probably the time to buy the Greek stock market with a stop just below zero, but this thing is really taking a huge hit, as you can see. Now, things can't go below zero, so it's probably going to be down here somewhere. But anyway, this was furnished to us by one of the folks in the Tiger TV here, so I thought I'd bring it up and show you. It should blow it up a little bit so we can see it a little bit better. There we go. And this is referred to as the largest, stock market collapse ever, which I guess it is. I don't know. Maybe they'll reissue everything and make it a lot different, but we'll wait and see. One of the things that someone asked me over the weekend was in 1929, what happened to the Dow Jones? Well, 16 of the Dow 30 stocks went bankrupt. Actually, AT&T went bankrupt twice. Now, you have to remember now, in 1929, in 1930, we were looking at some of the greatest inventions of our lifetime: the telephone, electricity, the automobile. In 1932, I believe or 1929, 1930, there were 2,000 automobile companies in the world. And of course, it got down to 3 a little bit later, but we'll have to wait and see what happens. But please, folks, pay attention to that chart on the New York Stock Exchange Index. We've been looking at this thing now for several months, and it's just acting so perfectly that you just can't put that down to say that that's something's not there. So we are in a bear market. They just haven't told the rest of the world that that's what's happening. But in fact, that's what's actually happened. Okay, now the next chart that I wanted to show you is a currency chart because it's related to some of the things that are happening in Asia and stuff. And this is the dollar yen chart. And as you can see, we started this correction that we looked at 2 weeks ago when we were touching that trend line on the downside. And then on January the 4th, we started to break down, and we've continued to do that. And we've made the biggest correction now since this whole bull market started, way back in 2012, and that's when Tom O'Brien was calling for King Dollar. And this is a big bull market. There's no question for it. We want to be looking for a place to buy this, and the most logical place looks like around the 111 area, and that is spot on at the the breakout of the old high from 2008. So we'll watch that closely. That would be a 382 of the whole move down, but we're a long ways from that yet. We're still 5 handles away, and so there's no reason to think that you need to get in now. It looks like we're getting ready, to go a little bit lower. So we'll see what happens. Now, of course, the number one chart that everybody seems to be focusing on is the gold chart. And we'll put this up and take a look at it because gold is actually acting relatively well, given to the fact that it's got an albatross hanging around its neck. It's acting very, very well, considering that this albatross, known as silver, is just acting absolutely horrible. I mean, silver is lagging so badly. It's just really unbelievable how much the silver is lagging. So I want to show you this just to show you the relationship between the two, because it's quite unusual to see the difference between the two of them so much. Usually what this means, it's usually construed as bearish, but if silver could start to pick up, then you'd have a chance that gold could really go, because that's what's holding it back from looking at the charts. Because as you can see, gold broke out above the highs of December 20th, very, very easily, and we have not even done that at all with silver, and they're still trading down in the area of where it was right around the end of the year, right around this $14 per ounce level. So that's what it looks like. I still think we're going to be able to get to that price, and then we'll be able to look at it, and we'll see what's going on. One of the things that I did over the weekend, I had to do a special report for someone, and so they asked me, what were the factors that made me bearish the market technically, and I came up with 17 factors of what I thought were bearish. Some of them were the ones we look at, the momentum and the fact that the global markets are bad and the patterns that are there, whatever it happens to be. But there were 17 of them, and I tried to look to see, what was happening with the. Got a little break here. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. And I'm starting a hedge fund to work on the Powerball number for next week. So those of you that are interested in being big winners, please send me your cash directly and I'll buy the tickets for you. I won't be able to give you what the numbers were until after the drawing, so please get the money in as fast as possible. I went to buy 3 tickets on Saturday and the line was 45 minutes long to get a ticket. I can imagine what it's going to be now. It's probably already known. But the actual odds on this is anytime the Powerball is over $300 million, it's worth a $1 bet. I know it's $300 million to 1 to get it, but if it's over $300 million, the statistics say that it's better to put a dollar in. That's the main thing that you want to do, and we'll see what it is. You're right. It is a racket. It's also in organized crime. It's known as the numbers game, and that's exactly what it is. What it is in the numbers game for the way it used to be, well, the way it still is in many cities, is it's the last 3 digits of the total circulation for the newspaper. In other words, the last 3 digits. There's 9. You figure 10 times 10 times 10, so it's a 1,000 to 1 shot to hit the lottery. And what they usually play is they pay 200 to 1. So I mean, they got an 80%. Vigorish, to do it. So it's pretty much that way in the thing. But where else can you, have a chance to be a billionaire other than if you're just trading the E-mini S&P? I mean, that's the only other way you can do it is trade that E-mini S&P to make $1 billion. Everybody knows that. Anyway, it's a fun thing. You're helping somebody. So for $1, give it a shot. If you hit it, give the money away because you're not going to be able to spend it. That's for sure. because it's just too much money, but it is fun to watch it. But the money is coming in from all over the world. That just shows you how our game is played, and that's the same thing that's been happening in our stock markets during this time. Now, the last chart, not the last chart, but the next chart that I put up was it's better to take the odds on the E-mini, Jay. You're right. Look at the transit chart that our good friend Shane Smolyans sent us. This is showing you that we should have a rally 11th, 12th, and 13th, and then we start coming down, and we'll see it. Now, he showed me some things and research that he's doing, and this young man really does an unbelievable job. He's running his own hedge fund now and doing incredibly well. And what I wanted to bring to you is some information that back in the mid 80s, when Jim Twentyman and I were looking at the astrology real heavily, we were looking at the work of George Baer from his book, The Egg of Columbus, which was a really unusual book on how to look at Fibonacci numbers and spirals and stuff like that. But what happened was we were trying to find out information from Baer because we didn't know very much about him. He wasn't a recluse, but he was just a very, very private individual. And we knew that he had a private rail car that he took into Chicago, and he traded out of this rail car down in the south side of Chicago in the stockyards. It was an incredible what do you call it, rail car, almost like from the Wild Wild West. But what happened was I was chatting with one of my buddies, a pharmacist friend from Temple University here in Philadelphia, who had a beautiful pharmacy and nursing home up in Monterey, California. And one day I talked to Jack all the time because we were really good buddies. He has a home on a 17-mile drive there. And I asked him, we were just chatting about the markets. And, I happened to bring up the name of George Baer, and he laughed and he said, I got a lady in a nursing home. She's 92, and her name is Baer. And I said, find out if her dad's name was George. And he called me back in about 20 minutes. He said, yeah, that was his name. And so Twentyman and I took a trip up there, and we spent a couple hours visiting with Mrs. Baer. She was pretty lucid. Her health was not that good, but her mind was pretty good, and she showed us pictures of the rail car and what it looked like, and she showed us pictures of people that were very important. Jay Gould was in there, J.P. Morgan, Arthur Cutton, and a couple other people. Who was the mayor of Chicago at that time? God darn it, I can't remember. Anyway, it showed a picture of this rail car and how elaborate it was. Oh my God, it had ticker tape in it, a bedroom. It was just an office. It was just a little a sitting room. It was really awesome. And we asked her for some of those pictures, and she said, I'll give them all to you. She said, once I pass away. And we said, okay, well. Time went by, and she passed away, and they threw all that stuff out. I never got any of those pictures at all. But the man lived a very, very quiet life, but he did make a great deal of money, she said. She was taken care of through a trust fund, and he gave millions of dollars away, she said. And he was her only daughter. And but anyway, what Baer did, he was really big into astrology, and his key thing that he looked at was the speed of Mercury. In other words, when Mercury slows up and speeds up, like when it comes into retrograde and direct, he thought these were really critical times. Well, Shane has done some studies that literally, when I looked at it over the weekend, I couldn't believe how amazing it was, because it showed that the market, should be bottoming sometime late Sunday night, early Monday, rally up for 2 days into the 13th or 14th, and then come down hard into the 23rd. And that's pretty much what that pattern that we're looking at in the New York Stock Exchange index is actually doing. Now, he's gone farther with this out into the future, because once we started to see how important the speed of the Mercury was, we added a couple other planets to see how the speeds of the other planets move, because Mercury, being the closest one, moves very, very fast. Then there's Venus, Mars, and Jupiter. But you watch the speeds of those planets, and when they start to slow down or speed up, these are the triggers, it seems like, that makes the cycle work. And guess what, folks? We came up with a date that looks the date could be the big bottom here for the next few months in the stock market. and that date is, and so we'll see what happens on that date. I don't know if my computer cut out on that minute or not, but it's Memorial Day weekend, folks. That's the one we want to watch, and we'll see what really happens. Regarding the gold, it was May the 30th. That's the day. May 30th is the date, Mr. Z. Keep an eye on that. It's for 2016. Late May 2016. We'll be watching it very, very closely. Now, here's what you want to look at now, is if the market is not bottoming really sharply on January 23rd, the odds of that May 30th date is going to be greatly reduced. So this thing has to keep working. That's the real thing to be watching. So we'll have to look at that very, very closely. But Mercury is a planet that's been looked at by the Babylonians. This was one of the very first technical charts ever done. It was done about 5000 BC. I think it was the Babylonians or the Sumerians. The Sumerians were before the Babylonians. But if you're talking about something that's been around for thousands of years, it must have worked. So.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got our first caller, Paul from Fremont, California. Paul, are you there?
Yes, sir. How you doing, Larry?
Pretty good. That's a suburb of Oakland, isn't it?
Yes, it is. I'm right in between
that's
Oakland
what I
and San
thought.
Jose.
What can I do for you, my friend?
I just had a quick question. We spoke on Friday about your long-term projection of the S&P 500, and I was curious if there's any scenario that if it were to play out, it might change or postpone what you see happening.
Well, the only scenario with that would happen is if the market would reverse, and the first sign would be that we would take out the November highs up at 2070 level in the S&P, and then if we took out the all-time highs at 2134, then I would have to throw in my chart pencil and go back to using point and figure charts, because this thing is so darn clear, it's scary. And not only that, you can't get people to believe it, and that's another reason it makes you believe that it's got something, really ominous coming out. But that's the only scenario that I could see, Paul, is that if we just turned from here and everything became, really, really bullish. But my goodness, if you look at all these charts, I just posted the chart of the banking index in the room, and it's just a horrible chart too. It's taken out the lows of August 24th. What that means, Paul, when it takes out those lows of August 24th without making a new high, it means that the cycle crested that caused that low, and that means that there's another low out there, and the next low out there that's of major significance doesn't come in until, as you can see from the Bradley model, doesn't come in until right around the 1st of June. So that's what it looks like to me. But on the way back up here, we went down 190 handles in the S&P, so we could rally back, 50 to 70 points. Well, we've already rallied back 30 points in the first few hours from last night. So somewhere between 50 and 70 points between Tuesday and Wednesday is what I'd be looking for a rally, and then more to the downside. That's what it looks like to me.
Okay, great. Yeah, actually, I was so fascinated by your podcast here on YouTube. I went and downloaded your newsletter, and I've been going through some of the past issues, and it's such a wealth of information. I just want to thank you again for putting the time and putting everything out there for us.
Well, thank you very much, Paul, and you have a happy new year, and call in again when you get a chance or a question, okay?
Absolutely. Have a good one, Larry.
You bet. Okay, as I've mentioned, the banking index is also taking out the lows of August 24th. We haven't even come close to those yet in the Dow Jones or the NASDAQ, or the S&P, but I just think it's just a matter of time. The New York Stock Exchange Index has already taken out those lows, and it's also very, very important to see that. Now, if we look at what's happening in some of the other markets, around the world, let's just take a quick look here at the emerging markets. If you want to see something that looks really nasty, is to just look at Asia and the emerging markets. Those are the ones that have been the most bearish. They topped way back in 2011, and they've been in downtrends ever since, and they continue to be heading lower. And that's what it looks like. The problem, folks, to me, looking at this is the fact that not anybody is looking at the the VIX index, because the VIX index, it's still at a level that is not even 50% of where we were in August. I mean, it tells you that there is absolutely no fear in this market, and that's a bad sign. You always had to be afraid of a little something, but this is not the case. So we'll see what happens here with this rally that we have. If we get a 3-day rally, and that's what we should get, we should get a rally into the 12th or 13th, and then we'll see what happens, and then we'll see what's going on. Now, one other chart that we want to pay close attention to, because of the January effect that's been talked about forever. It's been one of the more popular cycles that we've looked at, or other people have looked at, mainly Yale Hirsch. But you'll see that this should be the biggest mover, should be that the small cap stocks gain on large cap stocks, and this is not happening. You can see we shattered the low of August very easily, and we will make that 1.27 this morning down here at 103 and change, because we were right at it on Friday, and now we should get this little bit of a rally back. So just be really careful in here, because this is go back to that first chart that I posted in here today, folks. And believe me, bear markets can be very, very treacherous if you have a bullish view, because what happens is the old adage that Bernard Baruch said, you have a friendly hello and a goodbye. It's goodbye house, goodbye car, goodbye boat, and goodbye wife, and then you're back in the game again. So keep an eye on these things, because when they turn over, they can really be quite vicious, and we'll see what's really happening. The main thing, the fact is, the chart that was sent to me by one of my friends in Greece was on the Greece stock market, and you'll see what's happening. No, your dog leaves. The dog goes with the wife, because you don't have any dog food to feed the little rascals. So we'll see what happens with this. Okay, I'm just trying to show you some of the things that are happening. Let's take a look here. You can see the Chinese stock market, how it's starting to continuing its breakdown, and it looks like it's going to go down and make a double bottom to where we were in 2008, and we'll see if that's going to be the case. So the thing is, folks, the times are changing, and the news that you're going to be seeing, there'll be these rallies. You'll see that we have, these really strong opening rallies, and for some reason, that bear markets open higher and bull markets open lower. I don't know why that is, but it's just a statistic that I've always looked at, and you want to watch that also very closely. But we should be in for a good rally here. For a couple days. We've already rallied 30 handles off the bottom. We hit 92, I believe, 1892, and we got up to almost 32 this morning. So we've rallied, wow, that's almost 40 handles. So that's not quite, so we'll see. Now, the grain markets, they are not quite ready, but they're getting close. We're starting to see some signs of a bottoming process in here in corn and wheat and beans. And I'm still doing some more, waiting for some more technical confirmation on those. We'll have our good friend Rich Anderson on the post, hopefully this week, and we'll be able to watch what's going on. But the two things that I think that you really need to focus on is watch the bond market, folks, because if the bond market gives up and we start having a collapse in the bond market like we had in stocks, the game is over. Because that's the last bastion of support, because that was a flight to quality, and right now, the bonds have backed off almost 2 handles already since the high last night, and that's telling us that there is no people are just not concerned about what's going on with this. We'll take a little break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time.
Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we are still talking about the state of the stock market. The problem with this market, folks, is that we've come down so quickly. We dropped about 10% in a week in the S&P, and then also in the Nasdaq, and that's very, very significant. And when you look at this chart, I'm going to show it to you again because this thing is such a perfect replica of what happened in the hold on one second here. They're saying that my mic is weak and I don't know why. I'll put my voice up here and see if we can get it to work a little better here, and we'll see what's happening, and then we'll go from that level. Hopefully this will be a little bit better. But look at this chart here. You're looking at something that is really looks terrible. Look at this wide-ranging bar that we had, and we closed below the low of August 24th on the New York Stock Exchange Index, just like we did. If you go back to look where we were back in 2007, and we had the big rally up, and then you see we came down and we took out that low. Then we had a rally that lasted about a week, and then we started to drift lower, making lower highs, and then we finally made the last leg down. Now, the most vicious kind of bear market is the one that is built on false hope. In other words, you come down and you come down 7 days and then you rally 3, and everybody says, oh, that was the bottom, and then they buy it more, and then it goes down another 7 days and then up 3. I was in that 74 bear market, and that's the one that really cost me a great deal. But I was in the commodity part, but it didn't make any difference. And I want to show you this one too, because this is the same pattern that we're seeing. We're seeing the same pattern that we've seen over and over again. And I repeat it because there's some people that come in new each day and don't see it. But you'll notice here that this 1, 2, 3, 4, 5 expanding triangle pattern was just spot on in 1974. At the bottom, it didn't bottom until August the 9th of 1982, and that's when interest rates turned down, because interest rates had been going up since the mid-60s. And that was due to the Vietnam War. We were financing the Vietnam War out of, the till, and still never paid for that puppy. So we'll see what's happening. So just remember, these are false hope. Folks, if you have 401ks and stuff like that, whatever those retirement things that you have, be sure that you protect yourself, because you could literally lose, more than half your money, or even a lot more than that. And that doesn't mean it's not going to come back. But if you're in your 50s or 60s, you might not see it come back for a very long time. When the market topped in 1929, it wasn't for 35 years before it took out that high of 383. And I know people are out there saying, yes, Larry, but look where it is now. Yeah, but you ain't going to live that long, dudes. If you're in your 60s, you're in the 7 furlongs of an 8 furlong race, and you just don't have that many footsteps, to the finish line. Remember, this market really looks bearish. Remember, there's a medical terminology. When you hear hoofbeats, think horses, not zebras. And that's what you're looking at here, folks. You're hearing hoofbeats out there. So look and see what's happening to your charts. That's in the long run, we're all dead. And the good part is, Duffy, we leave with the same amount of money that Warren Buffett and Bill Gates and Bill Clinton, well, Clinton doesn't have, well, he has quite a bit, but that's neither here nor there. So, yes, we do leave with the same amount of money, but we're in a game now where there's some young people out there that I want them to protect themselves. If they if they don't do that, they're going to pay the price, because if you don't work for yourself, you're dependent upon somebody for your income, and you want to make sure that you have that income source coming in, unless you are a government employee. And there's quite a bit of those, but anyway, just try to protect yourself. That's the main thing of what we'd like to see. Like to see what it's like. Excuse me. All right. We've got another 10 minutes to go, I guess, here in the show. And one of the questions that folks have asked is, I wanted to show you one of the reasons why I think we're near an important bottom is if we look at the Dow Jones Transportations here, you'll notice that it's completing an ABCD down in this bear market. And, if you look at this is the biggest correction that we've had in the transportation since 2011. It's already gone 60% more than that correction of 2011. So we should be at a pretty good bottom here in the transportation index. But by the same token, it's very easily that the market could literally melt down. And the reason for that is there's no fear out there, folks. If this VIX index were way up in the air, higher than it was in August of August 24th, but it's 50% off of that. That high was 51 in the VIX. We're trading at 25. There is no fear in the market at all. There's just nothing out there. So that's another reason to say that you got to be fearful, because it's what we're looking at. I've had a question to bring up the chart that I posted last week, and that is the one for the Hang Seng Index, because it looks very similar to what we have in the some of the other markets, except that ABCD swing that you had there, you'll see that rallied to a 382. Well, we rallied to a 61% retracement in the New York Stock Exchange Index. Now, they're all taking out the August 24th lows, and that's a major low point. That tells us we're going lower. We're already taking that low out. We should rally from here a few days, maybe even a few weeks. I don't know how long it's going to last. I wouldn't guess it would last more than 3 or 4 days, given the fact that it's so bearish. But we rallied exactly to the 382 retracement of the AB swing in the Hang Seng Index. That took about 10 weeks, and now we've taken out that low, and we've already shattered the low in the emerging markets. We've shattered the low in the Chinese market. We've broken the low in the New York Stock Exchange Index. Small caps, IWM has just absolutely massacred that. This market is a bear market, folks. These are hoofbeats. Think horses, not zebras. You got to be able to to go behind the lines and wonder what's happening with this. Hey, the major stock along this way was Apple, and that puppy didn't even close up for the year. Hello? What's going on here? And remember that we had the worst start. Oh boy, I'm being a little too bearish today. We had the worst start of a market since 1932 in January. From the first day of January, it was the worst January 1st day of trading since 1932, and that's when the Dow Jones hit 41 on July 5th, 1932, after coming down from 383. Okay, that's what we're watching. I do believe that we're going to be looking at some type of a bottom in commodities, pretty soon. This is the long-term CRB index. I want to bring it up here and to show you that we do have a big ABCD coming down here, looking at the support. These are annualized returns on commodities, and you can see this has been a horrible year for it. So we'll have to just wait and see. Just remember, this thing looks very, very bearish on a long-term charts, folks. So these short-term bounces, and that's all we're getting, is what we're looking at. The crude oil. Today we had $1 a barrel rally. It was a small ABCD pattern, just absolutely perfectly up there at that 32 or 33 level, and it's already coming down $1. So we're not done in oil yet either. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to wrap it up here, but the writing is on the wall. We're in a major bear market. We have been for quite some time, and we're starting down. This could be, you know, the third leg of a elevate wave pattern, and that can be one of the most vicious. 5, of course, being the worst of all. But you'll have to be able to see what happens. Remember, folks, I don't know if you remember the whole scenario of 1929, but 1929, the market broke down very badly into the crash. The bottom of the crash wasn't on October the 29th. The bottom wasn't until November the 11th. Armistice Day, and then the market rallied from November into April, making almost a perfect 61% retracement. And from that level, when it made that 61% retracement in April of 1930, it dropped 90% of its value between 1930 to 1932 in 2 years. So remember those numbers, folks. We're going to look at them along the road. I don't know if this is a 1929 or not, but the things are there. We've had this big 5-wave pattern going on. Everybody, most of the world is involved in stocks, and they're getting their heads handed to them, and they don't know why. So, and I don't know diddly squat about the fundamentals. You know, there'll be QE5, QE6. Hey, folks, these QEs, look where we are now, dudes. This thing ain't working. Listen to the hoofbeats. These are not zebras. These are horses, and they're wild puppies. So be careful. You know, we'll see what's happening. You know, this thing is looking pretty bad. And nobody knows what's going on in China, because they can change the rules there, anything that you can look at. The German market is holding up a little bit better than some of the others, but it's still, you know, not much of a holdup when you look at what's happening longer term in the DAX. You know, that's the big thing of what you're looking at here. So keep in mind that that's what's going on, and you want to be aware of what's going on here. Okay, the next hour we got the bull bear binary option hour with Tommy O'Brien and Daryl Martin, and then of course we have Basil, Steve Rhodes. It's just a great lineup here. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.